Hey everybody, Smart Silver Stacker here. Welcome to another live stream. So we need to talk about the price of gold and silver, whether markets are being set up for a major deflationary collapse here. Now, if you were watching the markets yesterday, you saw that there was sort of a pan sell-off event. We had all of the major stock indexes pretty deeply in the red. Silver dropping something like 3% or more throughout the day. You can see it on this chart here, this red candle for yesterday. Big decline. Same story in gold. Gold had a pretty rough day yesterday. We're looking at the weekly chart. Let's change that to daily, and you can see same story. Just a straight down red candle closing at the bottoms of the day. Not looking good, right, from just a daily perspective. But if you zoom out and you look at the big picture in these metals and in the markets, you can see we had a major breakout in silver recently, and that breakout is still intact. So I don't think it's time to panic just yet, and yet there is some reason for concern here. So let's talk about why markets were dropping yesterday. It all has to do with the Federal Reserve, right? We had the FOMC meeting kicking off yesterday. Today we'll be getting the results from that meeting, as well as the conference, the press conference at the end of that. Now, as far as the FOMC meeting itself goes, there's some speculation out there that we might get a surprise rate hike from the Federal Reserve. Now, I don't think that that's very likely, but let's just say that that does happen. Let's say Jerome Powell comes out today and he announces that due to persistently elevated inflation, that the Federal Reserve has decided to hike rates by surprise. Well, look, if that happens, the price of gold and silver could tank, as well as the price of everything. I mean, all of these markets will come crashing down if that takes place. The reason being that so far, markets really have priced in rate cuts. So they're not anticipating tighter policy from the Fed. Worst case scenario, what markets are anticipating is that rates remain where they're at for a prolonged period of time. But look, I mean, the Fed, I don't know what they're going to do. If the Fed comes out and announces a surprise rate hike, all bets are off, and there will be a crash likely in assets across the board, and gold and silver are no exception. They'll get sucked down with everything else. However, the more likely scenario, I believe, is that they're going to leave rates where they're at, and they're going to be cutting rates eventually, even if they do crash markets with some kind of a rate hike. I think that that will simply be the beginnings of a crisis, which will force the Federal Reserve to return to easy monetary policy. So really, the two scenarios we have here are the Fed is forced to cut because we have a insolvent banking sector, we have a bankrupt federal government borrowing through the nose, up to its eyeballs in debt, or they hike, they collapse everything, and then they have to cut anyway to reinflate the bubble, because that's typically what they do. So if you've been looking for a pullback, an opportunity to buy some silver, it's probably about as good an opportunity as you're going to get. Now, sure, if there is some kind of a pan sell-off event, we might get a better opportunity. I think that with physical silver, it's quite likely that even if the spot price crashes, premiums will simply rise, and this is probably about the best price you're going to see. SD Bullion right now has these kilo bars. You can get them under $900 now. Might be the last time you can do that for a while. So if you're in the market to buy into this pullback that we've witnessed in the markets, in the price of silver, make sure you check them out. That's where I buy my gold and silver. But I want to talk about something else. This is why ultimately the Federal Reserve is going to be forced to ease monetary policy, regardless of what they do today. I mean, it's very possible that today Powell comes out and has some hawkish talking points. They're probably going to leave rates where they're at, but everything is going to depend on what he says at that press conference, even if rates stay where they're at. Is he going to wane hawkish? Is he going to wave dovish? If he wanes dovish, if he talks about how rate cuts are still possible throughout the rest of 2024, we'll probably see a recovery in the price of gold and silver. And I also want to point out, going back to this chart real quick, when you zoom this out and you look at the bigger picture, the silver breakout from this consolidation pattern, It's actually very bullish to see it break out and come down and retest this $26 level, which is about where it broke out from. I mean, this is not a bad sign, right? This is a very bullish sign. If this resistance, what used to be resistance, you can see silver touched this level once, twice, 3, 4, 5 times, 6 times. Now, if it touches that level and bounces off, resistance will have become support. So that's very bullish from a technical standpoint. But this is an announcement we got from the U.S. Department of the Treasury, good old Janet Yellen over there running the show, from April 29th. Treasury announces marketable borrowing estimates. And this should give you an idea of where the price of gold and silver and where Fed monetary policy is ultimately headed in the long term to the medium term. Short term, sure, Fed could rock the boat, they could cause things to sell off, but ultimately the Treasury is borrowing vast sums of money. So during the April to June 2024 quarter, the Treasury expects to borrow $243 billion. Okay, that's not that much, I guess. During the July to September 2024 quarter, Treasury expects to borrow $847 billion in debt. So more than $1 trillion over the next 6 months or so. During the January to March 2024 quarter, the Treasury borrowed $748 billion in privately held net marketable debt. So we're heading towards deficits in excess of $2 trillion annually. The interest on the U.S. national debt now exceeds $1.1 trillion. That means every year on all this debt that they're taking on, they're paying over $1 trillion just in interest alone. That's the debt service cost. That number is rising. Now, look at the yield on the 10-year U.S. Treasury, 4.64%. The average interest rate is somewhere in the mid 3% that they're paying on current existing debt. So they're going to be borrowing over $1 trillion throughout the remainder of 2024. All of that debt is going to be taken out at much higher interest rates than the average. That means the interest on the U.S. national debt is set to explode because the interest rate is rising and the absolute amount of the debt is rising as well. So look, I mean, you tell me, what's the Fed going to do here? Are they going to raise rates because inflation is climbing in an environment where the U.S. national debt, the interest on that is already massively exploding? I mean, if the Fed comes out and announces rate hikes, surprise rate hikes, what do you think is going to happen to the yield on U.S. Treasuries? It's going to explode, right? It could very well kick off the beginnings of a debt and currency crisis, something that we've been waiting for, anticipating, forecasting for years now. And we're kind of in the late phases of this. So look, I mean, I suspect very likely gold and silver have hit their bottoms. I think the new support for gold is the $2,300 level. I think that the new support for silver is around $26, maybe $26.50, right around where the current price is. So I think what we're going to see is silver is going to bounce from its current level. I think gold is going to bounce from its current level, and we're going to see new all-time highs. If you've been waiting for a pullback, this is a pretty good one, right? In gold, I mean, we were over $2,400. Yeah, a slight pullback is pretty healthy. I mean, this was going up almost in a straight line. Same story with silver, went from $25.72, that's the breakout point I have charted here, all the way up to almost $30. We had the highest weekly close in silver in over a decade, very recently. So, yeah, pretty normal from a technical standpoint to pull back, reconsolidate, old resistance becomes support, and that's where you see the real takeoff begin. This is probably the point from which this launches. Could the Fed throw a wrench in the gears of the precious metals markets? Sure, but only temporarily because, it's an election year. Think of that. Fed thinks they need to hike rates, which is what they need to do to get inflation under control. They try that, they'll crash everything. How's that going to look? I mean, the Fed very well, if they hike rates by surprise, they could initiate the very crisis which forces them to ultimately return to quantitative easing, to return to easy monetary policy, to reinflate the bubble. Now, Are they going to do that? Look, I don't pretend to know the motivations of the central bankers on a daily basis. Ultimately, we know their goal is to inflate the currency, to transfer wealth from the poor and the middle class to the wealthiest who hold assets. The best way for us to prepare is to hold the assets, which are on sale right now. Gold and silver are absolutely on sale, to hold hard assets outside of the financial system. I mean, look, the physical metals are on a deep discount today. The miners are on a deep discount today. They're giving these things away. I mean, they're extremely cheap. The price of silver should be orders of magnitude higher than it is, and eventually we're going to find that price. What's it going to take? Probably some kind of a crisis, right? Probably some kind of a debt crisis, a failed Treasury auction, could be a geopolitical event, could be a de-dollarization, a coordinated attack on the dollar status as the world reserve currency. I mean, I don't have a crystal ball. I don't know what's coming next, but I do know that we have been printing and devaluing the US dollar to the tune of trillions of dollars. I know that the Treasury just announced that they're going to be borrowing trillions of dollars moving forward. So, look, I mean, if you want to wait for a crash in the price of silver to buy in, are we going to get that? Maybe. You might. I mean, it's always good to keep some powder dry, right? I guarantee you, look, if silver drops below this level, below the breakout level, it could be a very far fall. I mean, we could drop down to $22, the bottom end of this channel. It could fall further than that in the event of a pan sell-off deflationary crisis. If that happens, look, I don't give financial advice. I don't tell anybody what to do. I have never gone all in on silver, but if we see a plunge as a result of some deflationary crisis, you bet I will be buying this stuff hand over fist. I will be scraping together whatever fiat I can get to load up. But I don't really think that the odds of such an event are likely. That's why, I'll be adding to positions right now. I would be looking to add to physical. I'd probably buy some metal today, except I just bought some. Was I off by a few days? Yeah. Do I care? No, not really, because ultimately the metals are going to be heading much higher. But when you see a smackdown like we got yesterday, more than 3%, I do think it's a good opportunity to go in there and buy. Rolf Steiner in the chat says $12 silver. Not likely. I mean, that was a freak event. We can see it on the chart here. The COVID spiked down to just over $12. I mean, look, yeah, I would be all in at 12. Yes, I would be. I'm not telling anybody else what they need to do, but if silver was at $12 in the near future, I'd probably take out a second mortgage and load up. I'm not telling anybody what to do. Certainly, I would not advise anybody to use leverage or debt to purchase metals. But I mean, I think the odds of that occurring are just absolutely extraordinarily low. I think it's a pipe dream that we would ever get the opportunity to buy silver at that price again. But yeah, if we do, I would certainly buy into it. If we get a surprise rate hike from the Fed, I think there's a very low probability of that occurring, maybe less than 5% chance. I don't know. I mean, I think silver could drop certainly below the breakout level. I think probably $22 would be the target there. I'd still be looking at that as a huge buying opportunity because, again, ultimately, any of these pullbacks are just noise, I think, and the long-term picture is clearly further dollar devaluation. When the federal government is running $2 trillion annual deficits and growing, and that's absent any major crisis. I mean, yes, we're supporting wars around the globe, etc. We're not really directly involved in any of these conflicts yet. Wait until that happens and see how big the deficit gets, and that's likely coming as well. Wait until we see a recession. I mean, what does the government do during a recession? Look at what happened during the COVID lockdowns. They printed $4 trillion in a very short period of time. The Fed monetized all the debt. We know their playbook here. The playbook is dollar devaluation. The fact that the metals are still so cheap, well, consider it a blessing, consider it a gift, consider it an opportunity, because that's really what it is, the fact that you can still get these metals so cheap. And, when I see the price falling on a day like yesterday, it really doesn't make me question the fundamental core convictions I have surrounding the metals at all. I'm just glad that I can load up at lower prices. So that's it for today, everybody. Keep an eye on what the Fed says, what Jerome Powell says at that Federal Reserve FOMC press conference, because that's going to drive markets. And we're going to see a move, I think, one way or the other in the metals and in the markets. And likely it'll be to the upside. The Fed, I think they understand that the system is on the verge of collapse. Just look at commercial real estate. Just look at the regional banks. Look at the piles of treasuries that they're sitting on where they have huge unrealized losses. They know that they're going to have to get in here and print. They're just looking for the cover that they need to return to an easy monetary stance in light of the high inflation. They can't just go in there and start printing money. They need some excuse, some crisis, some justification. Very likely something like that is on the way. Again, let me know what you think in the comments down below. Keep an eye on these markets today. It's very likely to be an interesting day around 2 o'clock. I think that's when Powell will be delivering his remarks. And I'll keep you updated. I'll be watching those as well, and I'll be back soon to let you know what I think about them. Anyway, stay safe and happy stacking, everybody. Thanks for watching. Smash that like button, share the video, and I'll catch you next time. Smart Silver.